History always repeats itself, okay? It always rhymes, and the same thing kind of just happens in terms of bubbles, in terms of crashes, in terms of what the causes of the crashes are. It's always kind of the same thing, and I've been going through something I will show you just right now, and it got me really, really worried. Of course, I might just be worried because I've just worked on it, like for some time now, and like all of my mind is just focused on this. So maybe it's just, me being a little bit focused more on the negative sides of the equation, let's call it, or the economy. I want to talk about the biggest crash of the 20th century, and I'm gonna talk about 1929, okay? And I will show you that it's very similar to what's happening right now. Of course, there are some things that change, and that's the whole point, that it's never the same thing, but it always rhymes. Like, you have kind of the same causes, and they just a little bit altered, and I just want to go through it right now. Okay, so chapter 1 is the Roaring Twenties. Okay, that was the decade that followed the World War One and was defined by wealth and access. Okay, so if we think about it, we are kind of also in a place where there was a decade of excess and wealth, and it was followed by the housing bubble in 2008, right? People got like crashed, money was wiped out of the market, businesses were closed, people lost their homes, and well, yeah, it was like a war, but economic one. Okay, so, and this decade is defined by wealth and excess. You see people just, spending money like crazy, going on shopping without, thinking there's no tomorrow, traveling all the time. So yeah, this one is the first thing. Then you got the Fed warning, and the Federal Reserve sends a warning to the market participants saying that there is an excessive speculation. That was on March 1929. But if you think about it, the Fed did. They sent some warning back in their last meeting saying that, yeah, they are worried about some, levels of debt among companies. So there are some warnings here and there. And there's a warning, by the way, by one of the biggest investors and the most successful ones in the world, which is Warren Buffett, who didn't buy any stocks in the last quarter and actually sold 1 billion worth of stocks. American economy showing signs of fatigue. Steel production went down. Construction was in a bad shape. Sales were down. Consumers built high levels of debt due to easy credit. And well, guess what? That was in 1929. If I didn't tell you that was in 1929, you would be thinking that I'm talking about nowadays. And yeah, we are, seeing the same thing. Steel production is kind of down. Okay, steel prices are down too. A better indication that says that the economy is not in good shape is the copper prices. They are also down. Construction was in a bad shape. Well, we see that right now in the U.S. Automobile sales were down. Are you kidding me? Look at what's happening to the car companies and to the car sales. Consumers build up high levels of debt. Come on, $13 trillion of debt we got right now in the U.S. So the next chapter, the Dow Jones just kept on climbing higher, reaching a peak. In 1929, between June and September, the Dow Jones average gained more than 20%. The market was on a 9-year run. During that period, the Dow Jones rose by tenfold, and the Dow Jones reached its peak in September 3rd, 1929. Okay, so let's just break this thing. Okay, although there was like the warnings and those like bad omens, for the economy, the Dow Jones gained 20%. Currently, the S&P 500 is up between 17 to 18% this year, although we have, this 10-year run. And then we're talking about 9-year run. Okay? Then the Dow Jones rose by tenfold. Right now it rose, I'm not talking about, when I say Dow Jones, I'm comparing it with the S&P 500 because the S&P 500 is more indicative of the economy. Okay? The S&P 500 rose by almost 280 points, 280%, I mean. Let's call it threefolds. Okay? And well, they say that the Dow reached its peak in September 3rd, 1929. Well, we might have reached also our peak, but we will never know, right? We just have to wait to see what's gonna happen to the stock market. The Black Thursday, October 24. The Dow Jones lost 11% at the opening bell. The slide was mitigated by large investor buying blue chip stocks and steel stocks at a higher price than they were in the market, showing some kind of like confidence in the stock prices. And it ended the slide. Okay, and the Dow Jones closed down by 6% and also rallied on Friday. I don't know what will happen to us, like in nowadays when the crash will happen. Well, if like the Dow Jones lost, or like the S&P 500, let's call it, lost 11%, it would be a mind-blowing thing, right? Like it would be a mind-blowing thing if the Dow Jones or the S&P 500 lost 11% in one day. Okay, just to remind you, the markets lost between 2.90% to 3% when the whole trade war just escalated a couple of days ago. Okay, so imagine what will happen if we saw that the economy is going in a really bad shape. Okay, so we might get in a really nasty spot. The Black Monday, October 28th, margin calls. Many investors facing margin calls gave up everything and decided to get out of the market, which caused the Dow Jones to continue its slide, closing the day 13% lower. Okay, so now the rally and the slide. The Dow Jones managed to recover and rally for several months in 1930, yet from April 1930 until July 8, 1932, the Dow Jones fell to its lowest level, reaching 41.22 points. And in order to make it like more clear, the Dow Jones fell 90%. Okay, so I'm not saying that the S&P 500 will fall 90%, but I just wanted to show you that there are a lot of similarities with what happened in 1929 and what's going on right now. And that's what got me like a little bit worried, because throughout my experience and from the books that I read, and I read a lot of books, as you can see behind me, they always say the same thing: history never change. It might not be like the exact same thing, but it always rhymes. The same panic that caused the stock market to fall 100 years ago, or even 400 years ago, when we were talking about the tulip bubble, is the same panic, the same pattern, the same thing happens over and over again. And we should be wise, and we should try to use this thing in our favor. Okay, I'm not saying you should sell all of your stocks right now and get out of the market. I'm not saying that a crash like 1929 might happen. I'm just showing you the similarities that we have right now and back then. That there are some ways, and we should approach them, and we should know that there are some things that are going wrong, and when those things are like this, usually and historically, things will go bad. Okay, this is the history. This is what happens all the time. So this is it. Okay, I just had to get it out. I had to share it with you. So I will make a post about it, just to be more clear. I will make a post about it. I will make it in a nice slides, as I always do. And thank you for watching. Have a great day.